I want to first start by talking about the First Place program. The First Place program is basically our program that we have for first-time home buyers. So MHDC has these ability to give them, and basically what it is, it's down payment assistance for first-time buyers. What we do is we end up giving them 3% for closing cost, down payment assistance and closing cost. So that money will come to the first-time home buyer. They actually can go out and purchase a home, and when you look at these homes, the actual limits are a little bit less. So when you look on your blue sheet, you'll actually see that we're looking at anywhere from 100 to 115% of median income for that program. So you're looking at about $59,000, $60,000, basically is what they can do to use this program. They can use any type of loan. They go through one of our certified lenders. So they can actually take this loan, go through one of our certified lenders, get an FHA loan, do a VA loan, a rural development loan, or a conventional loan. Any type of that financing is available, okay? They got a choice to go with what we call a CAL program or the non-CAL. CAL stands for a cash assistance loan, and that is the down payment assistance. In this case, for a first-time buyer, it'll be 3% of the loan amount that they get. Helps them with their closing cost and down payment. They get that money. They go ahead and they get the loan at a 5% interest rate, so their first mortgage will be at 5%. Then we would come in and help them with their down payment and closing cost. Now, if they stay in the home for 5 years, that second mortgage is completely forgiven. So that down payment that they got is completely forgiven. There's no payment on it, no interest on it. It's completely forgiven after that. So what's the requirement? They have to be a first-time home buyer. They have to meet the income requirements, which is around $59,000, and they end up getting this house, and they end up getting, and they have to qualify for a mortgage, of course. Okay. Yeah, that's a, and that ended, it's $247 under that program, so it's very generous. Usually their income will dictate what they can buy and what they can't. So the income, the purchase price limit is very. His question was, is there a limit on the purchase price that you can buy? And it's $247,000 in that program. So what the MOAID program is basically, it's a breakdown of what it actually is under the First Place program. It's actually an enhancement to the First Place program. So these borrowers are still going to get 5% interest rate, except instead of 3% down, now they're going to get 5%. So the subsidy amount that they're going to get is more generous for them. Same rules apply. They only have to be in the house for 5 years, and it's completely forgiven. Okay, so it's all going to be the same across the board on that. So if they stay in the house for 5 years, it dwindles away over that 5 years, and it's completely forgiven after that. What else? The first-time home buyers waived. Now, they have to be affected by the storm, and how they be affected by it could be anything from they lost their house in the storm, they lost their job in the storm, they could have been displaced in a rental piece of property that they were displaced in. Anything that affected them in the storm, now they can go out and get this MOAID, which is 5% down now. So the first-time home buyer is waived. They still have to be under the income limit, but the income limit is going to be a little bit higher now. The income limit is going to be at $83,860 for no matter how many people are living in a home. So that's where the income limit, and you can see the purchase price limit's $301, which is very, very generous. So they got a higher income limit, they got a higher purchase price limit, and the assistance, the amount of subsidy is going to be greater for them. Okay? So that's what they're going to be looking for in under this program. Now, option 2 they have is the same thing, except now the lender that they actually go to can actually give them their first mortgage, because under the option 1, we're going to do the first mortgage as well as the second mortgage. The first mortgage is going to be at 5% today. So if they can beat that rate, if a lender can actually beat that rate, and today they usually can. So let's say the borrower has $10,000, $20,000 worth of money to come in at. Well, they can go to the lender and actually get even more down payment assistance. So they'll go to the lender will give them a 4.25% loan. And then we'll still come in with a second mortgage at 5%. So they'll come in with a 5% assistance. They'll get the same amount of assistance, but now they will have to pay back that second mortgage. Okay? So now the second mortgage under option 2 is going to be 1% interest, and they have to pay it over the next 10 years. So the borrower's going to have to look and see what's going to be the best thing for that borrower. Okay? What's going to be the best thing? They might save on their first mortgage, but then they'll have to pay the second mortgage. So now they have to look at the savings from a 5% interest rate down to a 4.25% interest rate, And then of course my second mortgage, it might be worth it to pay an extra 1%, and it might only be 70 bucks or something like that, or 60 bucks or 50 bucks. So it might be a better deal for them in the long run. So that's what they want to look at. They got two options, option 1 and option 2. But basically, that's how the whole program works. The program on the MOAID and the option 1 and 2, that's what you're looking at. Most of them, we've already done 7 of these. Okay, we already got 7 of them already reserved, and 1 or 2 have already closed. Okay, and they all went option 1. So they took our 5% interest rate, and then they took the actual grant, basically, if they live in the house for 5 years. So closing time is just like any other loan. In these cases, obviously, these are borrowers that probably either went out and bought an existing home that was already built, and I know one of them, I think, is already working on the one. Is there like a Cedar Creek or something subdivision out on the west side of town being built? I think that's where they're building one because it's already established and they're doing like phase 3 of it.
30 days.
30 days, it's like 60 days, at the most. So it'd be like anything. The good thing about this is that the borrower doesn't have to wait for our funds. We don't do any other inspections on the home. So there's nothing that the borrower has to go over and above, that the house has to go and pass an MHDC inspection or anything like that. The borrower will never even see us or even hear of us, really. They'll go through that lender. That lender will take care of everything for them, and they'll do it. It'll be seamless because the lender's going to front this money up at the closing table as well. Okay? So they don't have to wait for funds from MHDC. They're going to just do it all right then and there. So once they get that, they don't have to worry about MHDC. They don't have to worry about ever looking for us and slowing down the process of it. What they do is they get reimbursed back when they sell the loan back, and that's when the lender will be whole and made whole on it. Okay? So the buyers, this is how it's going to help you. It's going to help you to sell those houses. It opens up a whole nother market to you. Okay? Whether they were affected by the storm under MOAID or they weren't affected by the storm, there's always assistance out there for them. Okay? So now you got those lots that you're talking about. You're going to build on them. Now here's the market that you have out here for these buyers to actually go out and buy. You know, there's down payment assistance available for them. If they don't, if they were underinsured or something of that nature, and all you're looking for is how many more people can I get through the door to sell these houses? And that's what this is all about. It's how many people can we qualify now? How many people are either A, underinsured when they got it, they didn't have enough insurance at the time. How are we going to be able to get them in there? And this is what's going to get them over that hump. They got down payment assistance available to them. They can enhance it with their, if they do have insurance, they can enhance it and get some more down payment, which is going to lower their amount to purchase. It's going to lower their monthly payments, make it more affordable for them to afford. Maybe buy a bigger house or anything of that nature, whatever it can do to get them into that house. That's what it's all about. So that's how the MOAID works. And that's how you guys will market it towards your people. And I mean, exactly like I said, the great thing about it is you still have the First Place program too out there. So these are for first-time home buyers that might have not been affected by the storm. They're just looking to buy. Maybe they were renting the whole time and they're just sick of renting now. There's not much out there to rent or something of that nature. They're just like, how am I going to do it? Here's the opportunity for them to do that. You know, now they're a first-time home buyer. They can do the First Place program. They'll only get 3% down instead of 5%. But they'll still have something out there for them and be able to qualify for the loan. And that's what it's all about. Okay? So you guys have any questions? So yeah, it's anything that you guys are going to be building. If you guys want to do that, it's a lots. It could be brand new. It could be existing homes. If you're a first-time buyer or if you're not a first-time home buyer, it can be on existing properties as well. But right now we're talking about building and building up the area and stuff like that. And that's what the MOAID's all about, is to try and get those people into those houses. This would be for home buyers purchasing a home and trying to purchase a home. Okay. So this is all strictly for, and this is probably the last leg of all the stuff that you've been hearing today with the builders, the tax credits, all of that kind of stuff. This program, and this is what I'm here for, is on the last leg of the whole process. I'm here to help that home buyer get into that house and their permanent financing. Okay, we don't do construction loans on this program. This won't be a construction loan for the buyer or anything like that. They would still go to the bank and get their construction loan, or maybe the builder already has the construction loan and they're just trying to sell the house. And if that's where this program comes in. So it's the last leg on it, and that's where you want to market it to. You know, that's where you want to push those buyers down to that thing and say, here it is. There is down payment assistance for you. I had a couple of them stop by out there, Ask about they were underinsured or they weren't insured at the time. They lost their home. If they had decent credit, and they have decent credit right now, this would be the product for them. You know, this is what's going to give them their down payment for them to get into the house. Because most of these lenders are going to want 3.5% down minimum to do an FHA loan. And if you don't have 3.5% down, you're not going to be able to get the loan. So that's where this comes in, and MHCC is going to give them that 5%. Get them over that hump, get them in the house, let them be able to purchase the home and move on from there. Okay? So there's two options, remember. One with the option one where they get 5%. They get basically granted off if they live in the house for 5 years. Option two, they get a lower interest rate, maybe from the lender. We come in and they have to make mortgage payments on their second and at 1% interest, and they make that for the next 10 years. Okay?